I want to welcome our guest, Mr. Mike Miglio. You guys give him a round of applause, please. Here to talk about DeFi insurance. Oh, actually, a bootleg version of insurance, as he just mentioned to me. But go ahead, Mike. Tell them a little bit more about your background, man, who you are.
Yeah, absolutely. Great to see everyone here tonight. Thank you all for coming out. I want to preface this whole conversation with I don't claim to be an expert at anything. If at the end people want to challenge me, please don't, because I'm just out here doing my best. But as a bit of a background for me, I'm an attorney in the space. I actually founded one of the world's first crypto law firms back in 2017. If you tried to Google crypto lawyer, you would see like 2 people in Russia and 1 more in the US, and that was it at the time. So that's how I got my start, got in really early with some prominent projects and advised them on some advanced securities issues and navigating the legal landscape for crypto back when ICOs were a big thing. Fast forward to today, about 7 or 8 months ago, we officially launched what is now my project, which is a DeFi coverage platform, or insurance platform as people call it, and we're doing very well. We started the idea
What is DeFi?
Oh, that's okay. Let's start all the way back. So DeFi, for those of you that don't know, I know lately the crypto crowd here has been a very big mix between novice and expert. So DeFi stands for decentralized finance, and essentially it's offering financial products that normally in the real world or the traditional world would require a lot of different mediums. So you got bankers in the middle, people that are underwriting, agents and offices, all that stuff. But decentralized finance is a way of doing all of this work autonomously and connecting people almost peer-to-peer through smart contracts to offer different financial products like lending and loaning.
Sounds about right.
Yeah.
Well, go ahead. So we got. So how do we get to crypto lawyer, and then all the way fast forward into insurance? There's got to be some story to some of this.
Oh yeah. Well, the truth is that COVID was terrible.
The truth is usually a good thing.
The truth is.
How many people like the truth?
It's just not a
Truth
fancy
is the
story.
pizza's here.
Yeah. Is it?
The pizza is here.
No, we don't need that, right?
We don't need any pizza.
No, so basically.
Save me some pizza.
You know, I've been in the crypto space for a long time, and I've helped a lot of other projects navigate the legal landscape, and I've been advising and general counsel for various projects, and I saw a lot of other people make their way, and then right around COVID time, things got difficult at the firm, and I started looking for other avenues, saw a hole in the market, and pursued it, and it became Bridge Mutual, which is this DeFi insurance platform. We actually launched about 3.5 weeks ago, and we
what was
are now
the name of Jordan Belfort's firm?
What's that?
Jordan Belfort?
No, I had my own firm from the beginning.
But I mean Jordan Belfort, the guy that Wolf of Wall Street, what was the name of their firm?
DLA Piper?
No.
Nah, I wasn't part of it.
Stratton Oakmont. Why does his firm remind me of Stratton Oakmont? But Bridge Mutual. Tell me a little bit more about Bridge Mutual.
Yeah, so right now we're the second largest coverage provider in the space. The first is another competitor called Nexus Mutual. They got about a year head start on us, but we have a different take. We're more decentralized. Essentially what it is it's a collection of pools, and each pool represents a different protocol or something that you can provide or purchase coverage for. So as an example, get back to DeFi. You have lending and loaning protocols like Compound, right, or Aave or Yearn Finance, and the proposition is that you can basically put your money up and get a roughly predictable yield back over time, and other people can borrow your money as long as they put up collateral. And the relationship between the borrower and the lender is governed entirely by smart contracts, which people can audit and see on chain and verify that it works the way it does. And so because over time these products have proven themselves, now you see that a lot of these platforms have like $10 billion plus in locked value. The issue is that a lot of these protocols are trying to copy this idea or make different innovative ways to accomplish roughly the same goal or different types of products. And they're getting hacked, they're getting exploited. So every other week you'll read in the headlines on Cointelegraph or CoinDesk that another protocol has been hacked or exploited, $10 million lost, $80 million lost, and it's materially impacting the lives of people. And people have always wondered, like, why isn't there insurance for something like this? Like, what can protect me in this decentralized landscape where everything is ruled by code, but code can be vulnerable? And so products like Nexus Mutual came out about a year ago, or a year, I guess now 2 years ago, and provided some solutions. And now we're just creating better and better versions of these coverage solutions to allow people that want to take the risk to cover other people's risk. So on my platform right now, it's live. We have about 30 million almost, I think, total value locked in coverage available. So you can go and get an insurance policy right now against a platform like Compound or Aave or Badger or Barnbridge. Shout out to Barnbridge, Tyler Ward, one of my investors and also a good friend. He actually lives here on the island now.
Yeah, no, Tyler, little guy.
Yeah, I don't know if he's little. I've actually never seen him in person. But great guy. And
Tyler's actually cool as shit, bro.
yeah, I believe it. I believe it. So you can go and take.
Tyler's been here for about 3-4 years now.
Nah, different guy, I think. Tyler Ward.
I'm almost positive it's the same guy.
All right, we'll figure that out.
We'll check it out.
We'll hash it out.
We're gonna track down Tyler later.
So right now you can go and get a policy for anywhere between 2 to 10% annually. In other words, if you want to get an insurance policy for $100,000, because you have $100,000 staked in Compound or Barnbridge, you can put up about $2,000 up to $10,000 to get that covered for 1 year. And what that covers is hacks, exploits, and rug pulls. So any value lost from a hack, an exploit, or a rug pull. 2 to 10% might seem like a lot, but for a lot of these protocols, people are making well over 50% APY. So if it costs you 7% to insure your 50% APY gains, then it's an attractive offer, essentially.
I understand. Makes sense to me. So where do you see this whole, and again, you do not claim this to be an insurance product, you just think it's the easiest way for people to understand.
Yeah, so we created a platform that allows people to insure each other's risks or cover each other's risks. It's not the same as traditional insurance. There's no contract, there's no underwriters. The price is determined by supply and demand. Essentially, if there's $100,000 in the pool and half of it is taken by policies, then the utilization ratio of that pool is 50%, which is kind of high. And as the utilization ratio climbs, the APY goes up for providing coverage, but the price of buying insurance also goes up to account for the increased risk and lack of supply or high demand. But it is very different from traditional insurance, where you've got people underwriting these risks using centuries of data, like trying to figure out what the odds are that I'm going to die before the age of 35 based on my, ethnicity and health conditions and stuff like that. It's very, very different. It's market based.
So how do you think coronavirus has impacted your market? I personally think coronavirus has actually helped the DeFi world. More people being indoors, more degenerate gamblers.
Oh yeah. Yeah.
I mean not all DeFi people are degenerate gamblers, but I ain't saying anything about most of them, bro.
Yeah, COVID.
I said it as shoe fits, Shout out to Ken Griffey coming out with the rig release. We like you, Ken Griffey.
I don't think anyone can debate that COVID has been a generally positive thing for crypto, in the sense that since COVID has been around, the market has gone up. People are getting a lot of, hey David, getting a lot of, I don't want to say free money, but I mean it's handouts from the government, and that's
free money, bro.
Okay, yeah. So people are stuck at home and they're gambling with it. They're investing in Dogecoin and such. So yeah, it's been great. And I've had the trickle down effect, of course.
Are you saying investing in Doge is like gambling, sir? There is a very rabid Doge fan base.
Yep, and that's why I won't say anything bad about it.
I personally love Doge memes. I fucking love them, I do. Doge, I think that might be my next dog, like honestly. But so how do you see, like, you guys, what is the next path for you guys? What other products do you see on the horizon? Obviously, it looks like what you guys did was basically test the market to see if there was any viability to your product and to your company.
Yeah.
You're obviously filling a need. What have you learned as you started your product, and where you see it going, and how do you see it changing?
I learned that the possibilities are endless, and that the biggest struggle when approaching DeFi and figuring out what to do next is expanding your mind enough to fully understand like what the opportunities are. Really, you can do so many different things. With like coverage, for example, we started with smart contract insurance, which is basically you insure the value locked in a smart contract. If the smart contract gets hacked or exploited, or the founders rug pull you get your money back. But we also have stablecoin insurance, or coverage, I should say. Insurance might get me in trouble. I can't say it too much. Smart contract, stablecoin coverage is coming, which will protect against any depegging events. So if the value of Tether drops to 50 cents on the dollar, you can get insured the difference or reimburse the difference. We're going to have centralized service insurance, and really that can expand to anything. As long as you have another person who's willing to take the downside of the risk, you have a market. There are people that want to insure their risk. So this can really branch out into all kinds of traditional insurance stuff too, which is where it gets really tricky. So a big part of what we're doing here at Bridge Mutual is we're aiming towards and constantly building towards becoming a DAO, a real DAO, like a truly decentralized autonomous organization wherein the founders have no control, the team has no control, everything is governed by the tokens, and figuring out a way to do that as fair as humanly possible. Because truthfully, I don't want the responsibility. I don't want to be the reason why my projects can fail. We don't want any centralized points of failure possible. And once we achieve DAO-ship or becoming a DAO, then we will tackle more traditional coverage solutions because at that point, it's going to be something along the lines of regulation getting in the way. And they're going to look at me and say, hey, you made this. You can't offer car insurance on your platform unless you're like a regulated insurance entity and you have licenses. And I want to be able to say, I don't control the platform. I have nothing to do with this. Like it's taking on a life of its own. If people want to code car insurance and put it on the platform and make a product out of it, I can't even stop it. I can't even take it down. So,
Do you think the feds are going to go for that?
They're definitely going to go for it. We can go for people like me.
Yeah, like you just got no control over it. You can't stop it. Type.
Well, I mean, if it's true, then it's true, right? If I really don't have any control, then what am I going to do? Right? I'm just building it. I'm building it, and then I'm letting it go, and that's the way it should be. That's the future, in my opinion. And my reward is that
I have some people that would agree with you to that aspect. Can you give me some examples of companies that have successfully made this type of transition?
I know Compound did, but honestly, I spent the last almost full year just neck deep in my own work and my own product, and I haven't really been keeping up to date with what other people are doing, to be honest. So I don't want to speak too much about who's done what well or not. It's all debatable. But it's definitely happening, and it will happen.
I like it. So, do we have any questions for Mr. Mike Miglio? Right up here in the front, James. Come on.
Yeah, thanks for coming. It's great to talk to our founder. I have two questions. One is, are you guys going to offer other stable coins besides Tether? Right now, I think it's only denominated in Tether. Second question is, as an insurance user, I've been a heavy user of Nexus actually. The one complaint I have is not being able to sell my unused insurance because I go for a greener protocol later, but my insurance expiration is still not up yet. I want to resell it to others. So I think that would be a great thing to do for you guys to allow that, to be able to trade insurances, to trade coverages.
Yeah, I got the questions. So yes, the first question is yes. So for Tether, for those that don't know, and probably that's most of you, Tether purchased a large quantity of our tokens, so we are aligned with them. That's how I have to phrase this. And it's been an experience. It's pretty crazy. As a result of that, we've had to use Tether as our base currency for the platform. But we do have plans in the very near future to support USDC and to support DAI as well to have those coverage pools available. And also for the stablecoin coverage that will be available, it will be a vast majority of them. As long as there's a market for it, people will be able. So the way BMI works is permissionless actually. So you can go right now if you wanted to. Go to our platform, you can go to add contract and type in the contract address of any existing coin or platform on Ethereum, and you can create a pool for it at this very moment and start providing coverage and purchasing coverage, and that works as we speak. So that's how it'll be for stablecoins as well. As soon as a new stablecoin hits the market or a new protocol or anything, you can add it directly yourself in a permissionless way. The second question was, if you no longer have a need for an insurance policy that you have, can you just sell it and get back some of the premiums and someone else buys it at a discount perhaps? There are definitely problems that have to be worked out, especially regarding selling insurance policies. The reason that I think most protocols are against selling coverage policies is that what happens is a lot of users will buy all the coverage up, gambling that an event will happen in the future, and then when the event does happen, they'll be trying to sell it to users that actually need it at very high markups, right? And so then we'll have like no coverage available for anyone that actually needs it. It'll all be people speculating that a doomsday event will happen so they can profit off of other people's misfortune. And I've been thinking about how to defeat that problem for a long, long time. And there are ways
build
to
into
do
the
it.
smart contract that they don't have the ability to sell the premium for more than it's actually worth.
I mean, yeah, I mean, I guess
Well,
it's
what you
possible.
pay for it? Whatever you're paying for it.
Well, that might be a solution, and I think we can go back and forth with solutions all night, really. It's just finding the best one, the one that really makes sense. And I haven't yet settled on that. So for now, the Ethereum address that purchased the coverage has to be the one that experiences the loss, and then also you have to submit a proof of your loss when you make a claim. So when you're writing a claim out, you got to put like, hey, I was hacked, here's Compound's, the transaction ID, everything leaving the liquidity pool, it was a hack. And then here's a tweet from the Compound team, they said it's a hack. And then yeah, you know, that vote gets passed probably. But we've thought about that a lot. We've thought about a lot of things a lot, actually, in the making of this.
Next question.
Sure.
Hey, yeah, it sounds like a really interesting idea, and I'm intrigued. But one thing I'd like maybe you could explain without getting too far in the weeds is obviously with insurance, like the single biggest concern is really counterparty risk, right? That's where, if you look at the conventional insurance industry, all the big disasters have been, you know, the underwriter didn't have the funds to cover the risk. How does your idea, how do you handle that problem?
Wait, handle what problem? I mean, you rephrase it.
Of ensuring, of making sure that the insurer actually has funds to cover the risk that they're underwriting.
Yeah, so actually right now everything is one-to-one. So people put in the money first into the pool. So if you go to our platform right now, you'll see there's like $3.5 million in the Sushi Swap pool. Sushi Swap being a very prominent DEX that's DeFi. Well, actually, maybe not DeFi. Let me retract that statement. But 3.5 million in the Sushi Swap pool. That means people collectively can take out a total aggregate amount of policies that equal $3.5 million. Once that cap is reached, you can't purchase anymore. And if there's an active policy reserving those funds, people can't take their funds out until the policy expires. So right now we're one-to-one. However, we're working towards leveraged coverage so we can provide more coverage to more places. Because realistically, the odds are not all platforms are going to, or all protocols are going to get hacked at the same time. So there's some leeway there. We're actually not being very capital efficient by having a one-to-one backing. So we are going to open up leverage coverage very soon within a version 2 of the platform. And that is something that you'll see that Nexus Mutual does and some other of the competitors as well.
Next question. No more questions for my guy, Mike Miglio? We got one right here.
So far from the beginning, the colleges, do you have a number how?
Wait, it's too much.
Too much feedback. Come a little closer this way.
Maybe I'll turn mine off. And then...
No. He was in front of the speaker.
So how many millions of dollars you return to the, because there's 2-3 major hacks in device space. So how much money you guys return to the?
How much have you been liable on the hook for so far? Have you paid out? Have you had any losses?
How much? Oh, so far there's been no losses. There's been no claims that have been rewarded, but there's also been no claims.
All claims get turned down.
No, none have been made. No claims have been made.
What? That's how insurance works. You're not covered.
So there's.
That's not how insurance works?
It is.
I used to sell insurance before I got into crypto. Bottom line, you're not covered. But go ahead.
Yeah, we've only been live for 1 month or so, and so far no claims have been made.
All claims get turned down. We got a turn down division over there.
We're hoping to have a
turn down division. We already got one.
It's just, the problem is it's highly manipulatable, right? You can make a bunch of false claims.
That's why we turn down all claims. We don't take any fucking chances. Fuck everybody.
But right now there's about I'm only guessing because I haven't looked or counted in the last 2 days. There's about 6 million policies, $6 million in policies that have been sold already. Sold.
How many claims have been submitted?
One claim, and it was my claim as a test contract.
So no claims thus far.
No claims so far. It costs money to make a claim. You have to pay 1% of the amount you're trying to claim, and that is to stop people from flooding the system with bullshit claims. So no claims so far. No one wants to pay 1% to get denied. Yeah.
You already know. You pay your 1%, you're gonna get denied. He said it here first. Turn down department is fucking live.
How do you determine which smart contracts you're going to cover and which ones you're not?
Yeah,
You have a whole team of developers. Because, like, for example, there was a project that I saw that had no less than three reputable contract audits, and it was a complete rug pull.
Yeah.
They were proud of the fact that they rug pulled everyone with 3 audits. So how do you actually decide what you're going to cover? Because I assume you don't just cover anything, like you said.
Due diligence for the platforms you cover. I like that question.
It's a great question.
I'll
explain
How are
it.
you going to decide what to cover?
Yeah, so what I
We
love
already know
about
how we can prove and deny policy claims, right? They all get turned down. But how do you pick platforms?
so the answer about how we pick which protocols that we're going to offer coverage for is that we don't. And that's something I take a lot of pride in. We are as decentralized and permissionless as possible. As I mentioned, anyone can go to our protocol right now.
Submit.
Right. If it has a smart contract ID, you can put it in and you can make a pool for it. So anything can be covered. Now, that doesn't mean people are going to put money into it. That's a different thing. So you
It
make
doesn't
a-
mean they're gonna get their claims approved either.
Right. Say Pedro makes Pedro coin, and Pedro coin is promising 3 million % APY on his LP staking pools and other such things. If he makes a pool for himself on Bridge Mutual, then people can insure against Pedro rug pulling or getting hacked or exploited. If no one thinks the project is legitimate, they're not going to provide coverage for it. Nobody wants to lose money for the sake of Pedro coin if they don't believe that it's a legitimate project, right?
How many people are gonna back Pedro Coin? If you're gonna back Pedro Coin, let me know. See, we got some people right there. We got a
No,
pool.
they will. Well,
We got a pool, bro. We got a
Put
community.
your money where your mouth
I
is.
told you about Dogecoin community, bro. We got another community here in San Juan.
right. So the long story short, we don't choose, we don't curate. It's as hands off as possible. When you think about Bridge Mutual, I want people to think about Uniswap. It is as
can't help but
hands
think of
off as
scramble-
that.
scramble
We don't stop anyone from doing anything. You can make a coin or a pool. You can make a pool for anybody for any coin.
I like that. I like that process. I do appreciate the, the community allowing, what's valid and what's not.
Right.
I think there should be some form of parameters, though.
Well, no, there shouldn't. We thought about this for a long time. I'll explain over time, but basically, we want any random new project on the block to have a chance at being able to offer their users coverage, right? And they can take their own tokens and they can back their own pool so that people that provide coverage can get paid in their tokens and get a return on trusting that project and taking the risk with them and saying, yeah, I believe this project, it's not a rug pull, it's not a hack, it's not gonna get exploited, whatever. That's valuable. And no other coverage platform today in existence does that. Every other one is curating because they're manually underwriting the risk, whereas we allow the market, the free market, to underwrite the risk and say, yeah, we think this is how much this coverage is worth. So I think that's going to be a big differentiator. Now, there is. I'm not saying our method is the best method, but it's different. There is space in the market for both platforms like Nexus Mutual and Bridge Mutual to coexist, where Nexus is highly centralized, has KYC, manually chooses each pool, curates them, etc. And there's a market for projects like mine, where anyone can come and create a pool, improve themselves, and offer coverage to their users. And
Their community can back them.
and it's a beautiful thing. I mean, I'm really excited about what we're doing. And
Pedro
new.
Coin is in. We're rolling with Pedro Coin. I'm accepting donations today. How do I sign up? Bottom line.
Just do
We're
it.
gonna put a QR code up. The QR code is gonna go directly to Bridge Mutual. You can offer coverage back in Pedro Coin.
Yeah.
We're going live with this thing. All right, you guys. Any more questions for Mike Miglio? Let me get a round of applause for Mr. Mike Miglio, please. Hey, listen, you guys. Give me 2 minutes here. Give me 2 minutes here. I want you guys to know something. I gave Mike a hard time. Gave you a lot of sarcastic jokes and shit. The truth is, I really appreciate what you're doing. And it's not easy. And the fact that you have the background that you have to be able to navigate the legal landscape moving forward, I'm sure you realize other people will be able to copy your model and do other things with it. So with that, I appreciate you, sir, and I appreciate you being a true innovator in the space. When I researched you and what you had really done, I really was impressed by what you're doing. So I really like what you guys are doing. I don't know how valid your claims process is. You know what I'm saying? I'm not backing the claims process. All I can say is that this guy's blazing trails because he's doing shit in a different way and he's really innovating. You guys are smart. You'll pay attention to what he's doing. Either back or support him or do something similar because the guy's doing some cool shit. I appreciate you guys. That's our show for this week, man. Crypto Monday, San Juan.